Hi, welcome to the Market Alert for Friday, 22nd of July 2022. So bonds and big tech surges, ugly data hammers rate hike hopes. And what that's saying is that the data, the economic data that's published each day is already showing the impact of the already rate increases that the Fed have put into place. Next week, their forecast is for a 1% increase at the FOMC on Wednesday. So we'll just have to wait and see if that actually happens. Yields puked lower on week as rate cut expectations jump. So, blimey, we're going back to QE already then, are we? The expectation is that the Fed are going to start cutting rates, but they won't do that until the midterms, I don't think, for me, back in November. Talking of central banks, talk about a surprise. You wait for a Bush, you get two. The forecast was for a 0.25% increase. We got 50 basis points yesterday, so ECB launches liftoff after 11 years, hikes 50 basis points as it also unveils Italy-specific QE. Now, I think I mentioned this, that Italy have a problem, and now they're great, isn't it? So instead of doing the whole of the EU now, where they've got problems and buying back the toxic bonds, they're just using the vehicle. They can set up a new vehicle just to target just the Italian ones. I mean, it's incredible. The schizophrenic ECB is hiking at the same time as it indicates it will keep buying Italian bonds. Wow, you can't make this stuff up, can you? And that's just to save Italy going down the pan, which it is doing. I mean, Mario Draghi keeps trying to resign and they won't let him go. Well, he should be hung, drawn and quartered, frankly, for what he's done over the last few years. But there you go. That's just my own personal opinion. Euro tumbles, spreads blow out as the market realises ECB TPI is just another useless word salad. You ask for miracles, EU shorts, I give you the ECB. Yeah, exactly. Run by an official criminal, Christine Lagarde. And on the metals, JP Morgan Gold spoofer admits it was open strategy on the desk. That's the court case that's going on at the moment. We all traded that way. So again, the manipulation of the metals markets, which continues to this day. Economic news for today. Well, it's flash day, which is a real pain, frankly. You'll see there we've got the flash services all the way through the day. There are 15-minute intervals to start with, then hourly, and then over to the US. I got retail sales at 7 a.m. for the UK forecast to be lower. They will hope they will be, otherwise rates will be going up once more. Then again, inflation was up on Wednesday to 9.4% from 9.1%. So again, I would expect a rate increase from the Bank of England before the month's end as well. So flash news today, intraday, it's a bit of a pain, but it is what it is. It's 1 day per month. And gold-silver ratio stuck in a sideways range at the moment. Some interesting activity in the gold and silver markets yesterday, but my opinion remains the same, and that is we will see the price continue to be hammered to the downside until we get rate cuts and the dollar starts to fizzle out. Okay, that's a quick roundup of events. Let's have a look at the Dow for yesterday. Despite the fact of the rate increase in Europe, we see the stock markets moving higher. A bit weaker overnight at the moment, but trading up to 62% retracement from here to here. But if I was to draw, let me just get rid of this. If we go from the high down to the low, you'll see we're bang on the golden ratio there for yesterday and Wednesday's market activity, which is why the market's struggling a bit there. Prices need to close below the 50 and the 5 MA there, and also you've got support there from the 50% retracement. If prices move low, it'll need to take that out as well. So in the bigger time frame, Dow stuck at 3,200. There is the big round number. Yesterday we saw the market moving sharply lower after the ECB decision, and then once we got back above the low, you can see the buying there coming back above the low and the S1, and then it was just a one-way bid to the upside. So price is moving up. Let's just have a quick ballpark: 100, 200, 300, 400, 500 points yesterday. for the Dow on the upside there. Struggling with staying on the upside at the moment, but if it is to move higher, it needs to take out yesterday's high and also stay above the 50 EMA, DP, and we've got the 200 MA down here. But like I say, we'll just have to wait and see. There's no major news today. It's just the flash news, which is still inflationary. In the German DAX, a bit weaker yesterday for this market, obviously because of the rate increase. Just drawing some fibs, 78% retracement there, using the bigger swing there. And also you can see the 50 bar moving average is EMA there, bit of a struggle. We've got some supply coming into the market as well. Close below the 5 bar moving average would be required to move lower. Let me just remove these fibs and let's just draw some in on the downside there as well. So 38% and 50 tying in there, 50 tying in with the 20 MA. 38 still, like I say, that 5 MA is very important. The market needs to hold above that if it is to move higher. And the 30-minute chart for yesterday, market moving higher initially. Then we had the sell-off, and then the market traded sideways waiting for the ECB. The market moved up 100. Let's just have a look at that again. Let me just remove that. So we moved up 100, 200 points more or less, and then we came back 200 points. Took advantage of that short. I'll show you that in a moment. And then the market traded sideways, and overnight the market's currently struggling with the DP. So a bit of weakness around in Europe, which you should get if they raise rates. The stock market should be weaker. That's generally the relationship. But yesterday we saw the market being moved to the upside after the, sort of in between the Dow, the release of the interest rate increase and the cash Dow opening at 230, and then the market, as we saw, moving to the upside. In the 5-minute chart yesterday, we'll have a quick look at this, and took advantage of this move to the downside yesterday. You can see how they spiked the market down, brought it back up, and it didn't make any sense. It had to have some sort of normality come to the market. It was as if it was just engineered to move up, saying, well, 50 basis points doesn't really matter, and the market then saying actually it does matter, and they brought it down. So there's the trades for yesterday. 3.85 profit factor, 65 to 35 win-loss ratio, 518 profit there, and you'll see we started with 10,000 equity is 28,296. So back to the 5-minute charts. Have a look at the overnight. You can see that we've had a bit of a shakeout past the close. Some buying coming to the market there, but we're not doing a lot at the moment. We'll find out at 7 a.m. Back to the US, S&P also moving sharply higher yesterday. Let's just have a quick look at some of the swings. From the major swing there, again 62% retracement, and the market showed a bit of weakness overnight there. I'm just going to remove that because on the downside we've also got this where we could see the market moving down to. But in between getting to the 38s, you've got the 50 and the 5 MA as well. Very important levels. Keep an eye on these. As long as the market stays above the 5 bar moving average, it's bullish, as denoted by the green bars. And the 50 obviously showing some medium-term strength there as well. You can see when the prices are below, you can see how it's a bit of a resistance there. Market down, comes back, and the same for all of these until they break through, and then they switch, and then you'll see at the moment we're just above that 50 EMAs, whether it can hold or not. And in the 30-minute for yesterday, market fairly quiet until we had the ECB news, and then like the Dow, the S&P was moved to the upside. The FTSE a bit lackluster yesterday as well. You can see there, still waiting for the result of the Tory party, I would imagine, just to bring a bit of stability back, but it's not that weak either, to be honest with you. Out of all of the stock markets, it's very much in a sideways range, isn't it, which we can see there. But again, it needs to stay above the 5 bar. 50 bar giving it a bit of grief at the moment. In the 30-minute chart, again lower after an initial move to the upside. See how the 200 MA there was holding the market. They slammed it through with the ECB, and then they brought it back. They absorbed all the selling there that we see in that supply as it drove the market back above the 200 MA and the previous day's low, and then moved it back to the upside there. Overnight price is sideways. We've got the close, we've got the 50 EMA there, the market's currently sitting on, and the DP, which ties in with the 200 MA as well. So it'll take some breaking to the downside there for the FTSE 100. And in the end, you see we had a down day yesterday. Rate increases obviously affects the dollar, affects the yen, and price is down for the day. Overnight, though, you can see that prices are starting to move higher, coming off the 20 bar moving average there. Yesterday's trading was fairly calm, just a 100 point, 70 point range back to the down, then back up, and then the market waiting, and then a big drop of 150 points in the yen. When the ECB made its announcement, the market traded then sideways and eventually came back, and you can see the low has already been tested from yesterday, with the market bouncing off this at the moment and struggling at the 50 EMA there at the moment. Meanwhile, in the pound, this having already topped out at the 20 bar moving average and the resistance to the left, we can see that prices are currently trading below the 5 bar moving average. And from this low to here, we can see we've got these downside targets for the pound should they move lower. It's also overbought there as well. And in the 30-minute chart of the pound, we move lower as the dollar moved higher initially yesterday morning, and then of course we moved a bit higher before the announcement. The announcement came. We see an 80-point move in the pound, exactly the same as we saw in the yen, the market being brought back as the dollar then declined. But overnight, dollar strength and the pound needing to hold at the DP level in order to move higher. But as I said, in the daily chart, we're already below the 5 bar moving average, and we've got the 38% fib there as well. And finally, starting off with the metals, in silver yesterday, you can see that we got a bit of a short squeeze going on there yesterday. Prices coming off the 89. They were moving down quite nicely in the morning, which you can see there. And then once the ECB made its announcement, this created a short squeeze. But like I said in the intro, don't expect this to hold. We'll soon be going back down to these levels because they don't want the metals to be moving to the upside. So at the moment, it was just sideways to lower, but I don't see this holding. They've not finished on the downside, as I pointed out yesterday. We've got a long way to go on the downside in this market, unless for one reason, and that is they stop the rate increases and they cut. If they cut, then we get exploding metals markets because the dollar will start to fall apart. And it'll go on to have proven that they can't stop the rot. They should have stopped it in 2008 and let the banks go bust, but of course that wasn't possible. They've been bailed out ever since. They printed trillions and trillions to keep the system going, and now we're seeing that even a few percentage increases are now coming to an end. So it was a good gesture on their part, but it's not going to work. So then there'll be a shift this time into the metals as the dollar declines. But until that happens, you will see all of the metals sideways and under pressure to the downside. Gold yesterday coming back above that $1,700 psychological level as well, which is important for this metal. There you go, you can see it was being marked down heavily, and then it's come back again. Expect it to make its way back down to $1,700. The dollar starting to move up only overnight there as well, which is going to add downside pressure to the metals. And crude oil still above $100 per barrel, despite a bad day yesterday, retracing 50% there. Okay, that's it for today. It's only the flash news in the UK retail sales that are going to be have any effect on the market. Otherwise, it's got to make its own direction and see what other external news influences create which direction this market is likely to trade in today. So as ever, just trade what you see, not what you think. And as ever, thanks for watching. See you in the next one.